Yeah, what you are looking at right now is Ryan's account already deep in profit. But trust me, it didn't start like this. This account right here started with just $15 and I managed to grow it all the way to 1,500 live, step by step. And the best part, this wasn't even my account. It was a giveaway account. Ryan won it after completing a simple task of creating an Xness account using my link and sharing it with at least 10 people who also created their accounts. So if you're watching this video right now and you want a chance to get your own account traded like this, make sure you do the same because you could be next. In this video, I will take you all the way back to where it started, from the very first $15 account, breaking down every trade, every move, and every price action strategy that helped deflate this account. So stay logged in till the very end because this one is pegged with real value that can completely change the way you see the markets. And don't forget to hit that subscribe button, like the video, and follow me on all social media platforms for more live trading content, free signals, and real results. So without wasting much of your time, let's jump right into it. Okay, so as you can see, currently we are already in $52 profit. This is a lot, so I'm going to break down how I got that profit from this jump 25. So if you can see clearly, right now I already entered in the jump 25 index. So I'm going to break it down for you. As you can see, I've already drawn the support and the resistance, and this concluded that this was a falling wedge, right? So if the falling wedge is ever to break to the upside, it breaks to the upside like this. It goes back, it goes up, and then it comes to the downside like this, and then breaks to the upside, right? And then after breaking to the upside, it retests and then continues going up as marked by those arrows that I'm drawing, right? So this is how a falling wedge does, right? So that's exactly how it moves. It's either it breaks to the upside or it stays in the inside the channel. So the chances of this falling wedge to break to the downside are very slim. They are very slim. Take note that 9 times out of 10 this falling wedge breaks to the upside. So what we need to do at this point is we just need to mark the areas of confluence that the market is going to face the difficulties. Like for example, the latest shadow zone that I've drawn, this is going to be our take profit because this is going to be a point of confluence. The market is not just going to break on that point because there is a lot of noise at that point, right? So now that the market is going to continue up, we can actually say that as a take profit. As you can see, my take profit has already been hit, but then this does not necessarily mean that the market is going to stay at that point. The market is going to buy for some time. It is actually going to continue going up. I can actually document this one like this. So right now, as you can see, we are already in $98. This is I don't know what to say. So actually I don't want to blow this account, so I'm going to make sure that Ryan withdraws from time to time so that he can secure some of the profit because sometimes it can blow, right? As you can see, now we are in $250 profit. This is a lot. I'm going to tell Ryan to withdraw after this trade because sometimes I blow. If you watch all of my videos, sometimes I blow. So now that I've closed, as you can see, I talked to Ryan, and then now Ryan withdrew. Now I'm back in $120 profit. So I'm not going to take any percentage of this account because this is purely a giveaway. So I'm not going to touch anything. Ryan is just withdrawing so that he can secure some of the profit and also the equity that he invested so that he doesn't get a loss even if I blow. So sometimes I can actually blow this account, but then you know, I'm going to keep going so that he can get a significant amount. With the $122 that is left in the account, I'm going to visit the volatility, the boom 150. So with the boom 150, as you can see, this is actually a new index that was introduced by Deriv. it's a good one. It just moves just like the same booms. Boom 500, boom 1000, boom 600. It's just the same. So what we're going to do right here is we are going to just trade it the same way we trade all other currencies or all other pairs, because it still follows the same principles of price action, right? So right now, as you can see, we've already identified a double bottom, right, as marked by that shadow zone, and then now we are drawing a neckline, right? So we know that the market is supposed to go to the upside, right? It is supposed to go to the upside. Okay, so the market forms a W like what I'm drawing right now. It forms a W, it comes to the downside and creates a low, and then comes back up to create a lower high, right? After creating the lower high, it then comes to retest that the previous low, creating the latest lower low, and then it is now supposed to go to the upside as marked by that arrow. It is going to face the confluence of the neckline, and then it will continue going up, right? So at this point, we can clearly say the market is now ready to go in the direction of a buy, because this is a double bottom, right? So this is a double bottom. We're just going to buy it, and also this one, I wouldn't recommend to go full margin, since this is boom. Sometimes it can go in a different or a wrong direction because it is boom. So sometimes it can go for a stop hand, trying to trap those early buyers so that they can be stopped out, and then the market starts to buy. So I'm not going to execute a lot of positions, so that even if it retests to the downside, I'll be safe. I'll be totally safe, right? So that Ryan will get a large chunk of money. As you can see, I'm already in profit, right? I've already doubled the account just in one trade. I've already doubled the account. So the market is going to continue going up. As you can see, the price isn't even halfway to the neckline, right? It's not halfway to the neckline. So it is supposed to touch the neckline at least before facing any confluence, So this type of chart moves in spikes and ticks, so it is not very favorable for you to keep on checking it, because sometimes it can go in a different direction. That's not the one that you had predicted, but then it doesn't necessarily mean that you are wrong, right? It doesn't necessarily mean that you are wrong. It just requires patience. So I would advise you to watch the video that I posted recently of the 7 trading rules. Those are very important, because you need to stick to those if you want to be profitable. If you really want to be profitable, just create a trading plan, stick to your rules, and then review and document every trade that you take, whether it's a loss, it's a win, or anything. What I know is that you always learn, right? So I will share with you my journey of becoming this type of trader, what I went through, my problems that I faced, everything, because I believe it was very, very, very important for me to learn through all those hardships and steps that I went through, because it was a very difficult journey, and sharing it with you will actually help you too. Anyway, as you can see, now we need to move on to volatility 100. So I've already closed in boom 150, and then now we are trading the volatility 100. So this is in that volatile, but then it doesn't necessarily mean that if you go full margin you won't blow the account. So what you need to do is you need to take every trade seriously, and you don't need to go full margin on any trade. If you're a beginner, you don't need to take any full margin trade, because I'm sure you know what will happen. Anyway, as you can see, currently we are drawing the lines of confluence, that is the support, right? So the market failed to break to the downside at that support line, the way it created a lower low, and then the market went up. But then if we zoom in, this is a daily time frame. If we zoom in, we can see that there was a channel that was being followed. The market was creating lower lows and then going up and creating lower highs and then creating more lower lows. So as long as you see lower lows, it means that the market is in a downtrend, right? As long as there is no change of character, the market stays in the downtrend, right? So what we are going to do right here is, since we've already identified the channel that the market is following, we then move to the down time frame, that is the H4, using the top-down analysis, whereby you go from the weekly time frame, daily time frame, going all the way back down to at least the 15-minute time frame. This allows you to see all the areas of confluence, the support and the resistance, the areas of demand and the areas of supply that are important, so that whenever the market passes through any of those, you will be aware of all those points, right? And then this one is clear. I traded it in the previous trade. This is just the same. This is basically the same. You know that the market is going to face the difficulty of that lower low that was created, so the market is going to buy. And also, if you can see, the market was in a channel that is more like a falling wedge, right? So if it's more like a falling wedge, we know that the market does not break to the downside, right? So this was a breakout to the downside. So once we see a breakout to the downside, what we know is, if it's a falling wedge, the market is supposed to go back into the trend. It is supposed to go back into the channel, right? So as long as the market is not back in the channel, we can buy at that point and make profit. So this is more like an area of correction. It will be trying to rebalance, because the market can never break to the downside in a falling wedge, right? So we just collected a few profit and then we closed. That's it. We closed. So I'm going to give you another bonus trade after this. So I'm just going to show you what I did. This, I think this is enough for Ryan. I don't want to keep trading his account because, you know, I might blow it. I'm pretty sure you'll be more than happy to use this 1,500. It's not much, but at least for someone who did what you did, this was enough. So before I move to the final and bonus analysis, I need to urge all TikTok viewers to please search for my channel on YouTube, because I usually post most of my giveaway in YouTube. So make sure that you search for my channel and subscribe, right? And also, all the links will be more clickable on YouTube rather than TikTok. So if you're on TikTok, make sure that you you subscribe to the channel on YouTube. Just go in YouTube and type Forex Comrade. You see my account on top of that list. So just go there. You can also find all my links on YouTube. They will be clickable. All my links to my Telegram and also to my Instagram, so that you don't miss if I post another giveaway or anything that might be helpful for you in your trading career. So let's move on to the final trading analysis. So in my final analysis, I'm going to visit the volatility 50. So in the volatility 50, before you even do anything, you can clearly identify that the market was in an uptrend, right? The market was in an uptrend. This is marked by the higher highs and the higher lows that are created, right? Up until to the point where the market created the latest higher high, and then it failed to break that high high after it attempted to pass through that higher high from the retracement that it had done. Anyway, as you can see right now, you can see that when it was creating the higher highs were being created in a rhythmic way. This is known as resistance, right? This is known as resistance. And at the bottom, the higher lows were also in a rhythmic way. So this is called the support, right? So you can clearly see that this is a rising wedge, right? This is my favorite, guys. This is always my favorite. You can master this technique and make a lot of money using nothing but this rising wedge only. So at this point, you can see that the market is currently facing a challenge of breaking that resistance that was formed by the first top, right? That was created by the first top, right? So before the market continues in any direction, the market will have to surpass through that line, right? Surpass through that resistance, and then maybe it can go up or even fail to break to that resistance and then go down, right? So let's see what the market is going to do after some time. Anyway, as you can see, the market went to touch that resistance to create a new higher high, right? The market went to create that new higher high. So we know that at that point where I've put the shadows on, I could have sold at that point and made a lot of money, right? But I didn't want to enter this trade because I didn't want to blow the account that I'd risen. This one is not mine, so I would actually respect it. If it was mine, I would have traded this one. So we know that the market will never break to the upside. As long as it is a rising wedge, the market will never break to the upside. So this was just a bonus analysis. I never wanted to trade it, but actually it's just that I missed the point where the market touched the resistance at the top. Otherwise, I would have taken the trade. So let me know what you think in the comment section below. If you have any question, just do well to drop it in the comment section. I'll be more than happy to answer that question for you. Also hit the subscribe button and like the videos so that it can reach a lot of people, so that they can also get this informative information. Until next time, goodbye.